Imagine having your financial future dictated by three numbers, but you're unsure what those numbers are or how they got there. Most people know that credit scores exist and that they can impact their ability to get loans or apartments. But the truth is, many of us don't understand the basics of credit reports and scores. In this world where information is power, having a solid grasp on your credit report and score is crucial for making informed financial decisions. But what exactly is in these mysterious documents, and how do they affect our lives? Let's dive into the complex world of credit reports and scores to uncover the truth. A credit report is essentially a detailed record of an individual's credit history. It includes information about their payment habits, loan history, credit utilization, public records, and inquiries made on their credit file. Think of it as a financial resume that potential lenders use to assess your reliability when making loans or granting credit. Here's a quick analogy. Imagine you're applying for a job at a prestigious company. Your resume is like a credit report. It showcases your work experience, education, and skills. But in the case of credit reports, the job is getting approved for a loan or credit card, and the employer is considering whether to grant you that approval based on the information provided. But what about those three mysterious numbers we mentioned earlier? Credit scores are calculated using information from your credit report, and they're usually expressed as a three-digit number between 300 and 850. Think of it as a grade given by the financial system, but instead of being graded on test performance or essay writing skills, you're graded on your ability to manage debt. Let's explore how these scores are calculated. Payment history 35%, credit utilization 30%, length of credit history 15%, types of credit use 10%, and new credit inquiries 10%. It's like taking a multiple choice test. Each section carries different weights, but they all contribute to your final score. One crucial aspect to note is that these scores are not based on perfect calculations. They're actually created by complex algorithms designed by the three major credit reporting agencies: Equifax, Experian, and TransUnion. Think of it like a game where you don't know the rules, but your financial life depends on winning. Retention bump 1. Did you know that 1 in 5 people has an error on their credit report? That's equivalent to about 42 million Americans having incorrect information affecting their scores. Now let's talk about how these reports and scores affect our lives. A good credit score can open doors to better loan terms, lower interest rates, and even more favorable apartment rental agreements. On the other hand, a bad score can lead to higher interest rates, denied loans, or having to pay for expensive security deposits. Retention bump 2. Think about it like this. Your credit score is essentially a financial GPA. But what if you had a bad grade in high school and had to live with that stigma forever? It's the same with credit scores. Once they're established, they can impact your life for years to come. Now let's explore some real-world scenarios where understanding credit reports and scores makes a significant difference. Imagine you're applying for a mortgage. If your credit score is above 700, you'll likely qualify for better interest rates and terms. But if it's below 600, you might be stuck with higher rates or even denied a loan altogether. That can put homeownership out of reach for many people who thought they were ready. Or consider this: have you ever been turned down for an apartment because your credit score was too low? That's right, landlords are increasingly using credit scores to determine rental eligibility. And if you're a student, having a good credit score can even help you qualify for better scholarships or financial aid packages. Now let's talk about the importance of monitoring and managing your credit report. It's not just about avoiding errors, it's also about maximizing opportunities. By checking your credit report regularly, you can catch any potential issues before they become major problems. And by paying bills on time, keeping credit utilization low, and avoiding new inquiries, you can build a strong credit foundation. Retention bump 3. Think of it like training for a marathon. Building up your endurance over time through consistent effort will ultimately pay off in the long run. The same goes with managing your credit report. Small steps today can lead to big financial rewards tomorrow. But what about those who have struggled financially in the past? Is there hope for rebuilding their credit scores? Absolutely. By paying bills on time, making smart financial decisions, and avoiding new debt, you can slowly but surely improve your score. Retention bump 4. Here's a surprising fact. Even having no credit history can be better than having bad credit. Think about it like applying for a job without any experience. At least then you're not burdened by past mistakes. In conclusion, understanding credit reports and scores is crucial for making informed financial decisions. It's like learning the secret language of the financial world. Once you grasp the basics, you'll be empowered to take control of your financial future. But here's a twist. Even with all this knowledge, there's one major thing that can still trip up even the most diligent credit managers: identity theft. That's right, someone can steal your personal info and ruin your credit score in seconds. It's like having a wolf in sheep's clothing. You think everything is fine, but suddenly you're facing financial chaos. Retention bump 5. Did you know that over $16 billion was lost to identity theft in the United States last year? That's equivalent to about $47 million per day. In the end, it all comes down to this. By understanding your credit report and score, you can unlock better loan terms, lower interest rates, and even more favorable apartment rental agreements. But don't just take our word for it. What do you need to know about credit reports and scores to make informed decisions in your own life?